What's good, my people? Welcome to this quick YouTube tutorial of how to calculate your lot sizing on the indices. This is a highly requested video. So many people DM me, bro, how do you calculate on US 30, on German 30, on NASDAQ, etc. And there's a lot of confusion out there. And even when I first started learning to trade the indices, I could not for the life of me find a tutorial on the internet of how to actually just execute a position on the indices. There was no clear tutorial. It didn't make sense in it. So I'm going to be the person here to clear it up for you guys so you never have to blow an account. Now, believe me, I have blown countless funded accounts because of miscalculation on the indices, especially US 30. It's so dangerous. If you mess up a decimal point, there's not even any time for you to react and close the position before it moves and violates your daily equity. So just make sure whenever you're in doubt, and this is just moving forward. Again, I'm going to teach you guys the calculation, how to do it properly. But whenever moving forward, if you're in a position where you're slightly unsure about how much lots or how big a position you should enter, always default to the downside. Always default to entering less lots, because you can always enter more on a position, but you can never remove an existing position without taking a loss. You see what I'm saying in it? So if you think it might be 10 lots or it might be one lot and you're not quite sure what the calculation was and you don't quite know if this decimal goes here or whatever, just enter one lot and check it on your MetaTrader 5. Furthermore, this is the reason why I only trade on my desktop, because when you're using MetaTrader 5 or MetaTrader 4 on desktop, when you enter a position and it gives you your buy line or your sell line, or it shows you your entry, you can actually click on that with your mouse and you can drag it down or you can drag it up, and it shows you the exact value of dollars or whatever currency you're trading in. It shows you exactly how much you're risking. So whenever I do enter a position, even though I know the calculation, I will still drag down my stop loss to where it needs to be. And I'll quickly check, is it the correct number? Am I risking what I'm meant to be risking? Obviously, if the answer is no, I will fix that and correct it. But it's just that final little confirmation, because when you're just entering off of your phone, and again, you may know the calculation, you may enter the correct amount, but maybe you messed something up. Maybe you missed the decimal. Maybe you didn't account for X, Y, and Z. And now you're in a position that's 10 times the size that you should be in, and you don't notice it because you close your phone and you go do something else. You see what I'm saying? Always check the stop loss sizing. Very, very important risk management rule. But yeah, without further ado, let's actually get into the proper calculation. How do you do this? Now, I'm about to say something that's going to confuse some of you guys, but your lot sizing when it comes to the indices is going to vary. There's no fixed lot sizing for indice trading. There is and there isn't. And I'm going to explain what I mean by this in a second. But dependent on your broker, dependent on your prop firm, dependent on who you're trading with, the lot sizing is going to be calculated slightly differently. Now, this is all due to something called contract sizing. Now, contract sizing, in the simplest terms I can give it to you in, is like a multiplier for your lot sizing. Let's call it that. So when your contract size is 1, that means that a one lot is just one lot. Standard contract, 100,000 contract, whatever. It's just one lot. Now, when you have a contract size of 10, that means that a one lot is actually a 10 lot. You see? Now, each prop firm, each broker will have a different contract sizing. Again, it differs. But the most common contract sizing you'll find, hopefully, is 1. And that is the easiest number to work with, because 1 is just 1. You don't need to do any crazy calculations. And it's relatively simple. Now, on the basis that you have a 1 contract size, this is how you calculate your lot sizing. Now, before I get into this, I hear you screaming and typing in the comments, how do I know what my contract sizing is? Dependent on your broker or your prop firm, if you go to the FAQ section or you contact customer service, or I'm sure if you read somewhere on their website, pretty much everywhere has a section where it says what their contract sizing is and what their lot sizing fucking ratio is. But usually for the big firms and the big brokers is 1. Now, if you have a 1 contract size, I'd highly recommend you check this. If you're trading a standard lot, and when I say one lot, when I say standard lot, I mean 1 lot. That means that each pip, so on a 1 lot, each pip is equal to $1. Very, very easy calculation. If you're on a 1 contract size, so again, this is the major part, 1 contract size. 1 lot means that each pip is $1. Now, when you come to actually put your position on the chart, so if I come here to NASDAQ and I look to enter, let's say I want my stop loss below this wick. Crazy stop loss, but that's not the point of this video. Let's say this is my position. So I look at the middle amount. This says what? It says 658 pips. This is how many pips I'm risking. So if I were to enter a 1 lot on a 1 contract size, I'd be risking $656. Vice versa, if I move this, I'm risking $129. Very, very easy, one calculation, simple. Now, if I were on a 10 contract size, and again, going back to the example earlier, the multiply, if I were on a 10 contract size, for that same 620 something risk that we were on a second ago, let's say just 630, if I was on a 10 contract size, I would want to enter 10 lots. Very, very simple, 10 lots. All right, so just to correct myself, because I think I might have just made a mistake right there. I can't see until I actually go back and edit this video. But if you're entering a 10 contract size, so if you have a 10 contract size, meaning you're on a 10 multiplier, essentially, if you were trying to risk the same $630, instead of entering on one lot, you would enter 0.1 lot because your trade is technically being multiplied by 10 times the position. Do you see what I'm saying here? So again, based off of the contract sizing, you would want to make that calculation. Now, again, I know it's a little bit tricky, and don't take my word for this. I don't want you guys to go ahead and just take Daniel's word and go bloat an account. When it comes to trading like US30 or NASDAQ or whatever, again, I always recommend always do like a test lot sizing. Do like a 0.1, 0.0. Again, it depends on your account size, but do a very small lot and drag your stop loss and see what it's meant to be. And then based off of that number, you can go ahead and actually make the calculation. So again, even if you're not certain what your contract sizing is, even if you can't find it, even if whatever the case is, if you're uncertain, and let's say you're on like a 100K account, you're trying to risk K, if you're uncertain, enter a 0.1, enter like a 0.01, for example, and drag your stop loss down. And regardless, your stop loss will be something relating to this number. So it may be like $6.32, it may be 63 cents, or it may be already $6,000. And then based off of the number, hopefully it's not over leverage, but based off of the number, you know, okay, cool, I just need to add a zero to this. So maybe you enter one lot, you drag your stop loss down. It says $6.32. You're trying to risk $60 or maybe 600. Based off of that, you add some zeros and you know what your lot sizing is. Now, bear in mind, this is only something that you're going to have to do like 3-4 times before you just understand what your contract sizing is and what your average lot sizing is. And then you won't have to sit there and do the calculation and drag your stop loss and do X, Y, and Z, because you just have an idea in your head of what your rough stop loss size is and what your rough like contract size, your lot size is, and like you will just do it naturally in it. So this is only initially, but again, I'd really, really recommend do a test lot size, enter a small position, drag your stop loss, see it, and calculate it based off of yourself. You see what I'm saying? Don't take the company's word for it. Don't use the contract size. And there's nothing worse than blowing your account over a simple miscalculation or anything along those sorts in it. So again, even though it is effort, it is time, it's not as easy as the Forex. Forex, you can use any online calculator and it calculates it pretty accurately. But especially on the indices, you don't want to do that. That's literally how I blew my first FTMO account. I was 0.2%. I mean, bro, imagine this, 0.2% away from passing my first 100K FTMO evaluation. I was on phase 2 and I blew the account because I miscalculated US30 because I used an online calculator that I thought was accurate, and it wasn't accurate because they don't know what your contract sizing is. You see what I'm saying? So never use these online calculators. It's a very easy way for you to lose your entire account. Again, always defer to enter a small position, drag your stop loss, see it for yourself, and that is it. Now, one final thing to add before we end the video is obviously on TradingView, there are multiple server providers. There are multiple NASDAQ. So right here, if I look at NASDAQ, we're using the Pepperstone provider. If I type in NASDAQ, I can find a different NASDAQ from, for example, 8cap. Now, if I go to a different NASDAQ, notice how the numbers are different. We're at a different level of price. Again, it's still the same price action. I'm still looking at the same chart, but I'm at a different level. Price is slightly different, and the numbers are slightly different. So some servers have their digits slightly different. So right here, for example, if you're using an 8cap server, instead of showing like 630, it's showing like 6,300, 6.3 thousand. So dependent on your server, they may have just added another zero. Again, that's something that you need to sit there and figure out, what server am I using? Which one closely matches my broker? Which one makes sense for me? And again, just defer to using a smaller lot sizing and you'll be able to tell, is this actually 6,000 pips or is this 600 pips or is it 60 pips? You see what I'm saying? Again, I don't know how clear I've made this, but I just don't want to say anything that's going to get anyone's account blown because they listened to a video online. You see what I'm saying? But hopefully, and again, I don't know how clear this video was, but hopefully you got some level of direction or some sort of understanding of how you can actually calculate your lots in it. But just to summarize, it depends on your contract sizing. Don't use the online calculators. They're all incorrect. They can't accurately do it for you. And always just defer to using a smaller lot size. Drag it on your PC, see where your level is at. And then once you've done this 2, 3, maybe 4 times, you will have an average lot sizing in your head. You'll know, okay, cool, this amount of lots equals this amount of pips or this amount of dollars per pip movement. And you'll be able to calculate it based off of that in the future. So you only need to do it a couple of times and then you're good to go. But just remember, always default lower, not higher. Don't blow your account. Stay safe out there. And that is it for the video. Like, comment, run it up, share it on TikTok.